Why did I get involved in lending? I got involved in lending around about the early 2000s, and it was a great time to get involved in lending. I was previously in the property environment, and I had a love of numbers, and I had a work colleague that got the opportunity to start up a mortgage management business. And it was around about the time that Aussie John Simons, everyone's heard of Aussie John? Yeah. He was keeping the banks honest, and Mark Burris, Wizard. So it was a great time to get involved in finance, because non-bank lending, which is where those guys specialised, and mortgage management is traditionally non-bank lending, came into the marketplace, and we were having a real impact because some of the products and the services and the rates that we were offering was really, it was a fantastic product and a great time because we really made the banks honest. We were able to keep them discounting their rates, and it was a really good time for consumers as well too. It opened up the market, and people became a little bit more savvy and had a little bit more choice back in 2002. I had a love of numbers, so it was an easy fit for me to move across to that. But one of the things that appealed about mortgage management, or being involved, I suppose, in advising people around the best structures around their loans, was because when you think about it, has anyone been online and done a mortgage calculator? Anyone jumped onto a website and done a mortgage calculator? If you haven't put your hands up, I know you're lying. I'm going to ask you to put your hands up a few times. So when you go into a calculator, who's then looked at that last line that says the total cost of this loan is going to be something like that? Now that would put you off. Didn't put me off. I said, you know what, that's a space that I want to be in, because I think we can add some real value to people to show them that a loan of $450,000, which is close to the standard these days, doesn't need to cost you $1 million. $1 million over 30 years. $1 million, that's 30 grand a year. So I sat there and said, okay, I want to be involved in that. The other side of it is 58%, I think the stats are around about up to 58% of people's personal wealth is tied up in the equity in their own home. So not only can you see that it can be the anchor that draws you back, it can also be the vehicle that helps you propel forward and move forward, and hopefully in the end achieve some financial independence. And I used to see that all the time in the property space. The home loan predominantly was the thing that held people back or helped them move forward. And so we made a decision that I wanted to help people move forward. I mentioned mortgage management before and non-bank lending. Let me just explain. FinancePath is a mortgage manager. How does that differ from a mortgage broking company? Well, a mortgage broker, if any of those of you out here, and I'm sure plenty have used a broker, they will source you the best product, and then they'll place you with that particular lender. Once the loan's settled, in most instances, you're in the hands of the lender that they've recommended. Mortgage management's a bit different. We do all the front end stuff. We get involved in the actual assessment of the deal a little bit more than a broker will. But the key difference is that we take over the management responsibilities. In essence, we become like your branch manager once the loan has settled. Why did that appeal to me? Because it meant that we actually had a vested interest. We were involved in the ongoing management, and therefore created a long-term professional relationship with our clients. It also didn't appeal to me. It didn't make any sense to sit there and just sell another bank's product. And no matter what they say, at the end of the day, they still see brokers in some part a competitor. So why would I just sell a competitor's product? I want to take control of the client experience, which is what we can do with our FinancePath range of loans, and have a bigger impact. Mortgage management, you could sit there, I could sit up here, song and dance, and say it's all about customer service because we manage the relationship ongoing. But the reality is, who's here that's involved with a business or owns a business or works for a business that says our point of difference is customer service? All right, so there's not that many. But I know of a lot, and it's a little bit wishy-washy from my end. Our point of difference isn't necessarily customer service. Yes, we guarantee it, but our difference is in the advice that we provide. If you want a product, we say to our clients, if you want a product, go to the bank. If you want a product, go to a broker. If you want advice, come and see us. And that's the biggest difference, I suppose, between that we see as our point of difference. Our clients, just want to give you a little brief understanding that our clients are from the first home buyer that's gone and bought their first place out in the back of Cranbourne, all the way through to very financially independent and wealthy investors in excess of $50 million worth of net worth. And that's great from our end, because at the end of the day, that diversity of client is constantly allowing us to learn. And it's also allowing us to share the lessons of those people that have done well with those of us that are still on that path. And tonight is a bit about showing you some of the mistakes that those that are still on that path commonly make, and how we can fix them.